because realistically, we look at what's going to happen with tariffs, what's going to happen to the economy in general, what's going to happen to all of this stuff. And the reality is when there is a recession where things are more expensive and we're looking at that, it tends to make the mortgage interest actually go down. So right now, what we're seeing with there might be a recession coming and all of that kind of stuff. We've seen that in the mortgage interest rates. We've seen that is something that is pushing interest rates down. So this week in this newsletter, it showed that the mortgage rates were around 6.83. That's for a 30-year fixed mortgage. I don't know when it was, if it was last week, it might've been last week, but I saw that mortgage rates ticked up to about 7%. And when that happens, people pull back and people don't want to buy. But the lower the interest rates go, the more we have buyers flooding the market. And so if buyers are flooding the market, that makes it so that you have more, what's the word I'm looking for? I need like an afternoon pep, I think. You have more competition, and so prices are going to be higher. And so that's what we've seen statistically over the last, and historically, we've seen that prices go higher as interest rates go down because there are more buyers flooding the market. There's more competition and more people are saying, yes, I want to buy right now. So right now is a better time to buy than if you wait for interest rates to go down. Because if you wait for interest rates to go down, you can just refinance when interest rates do drop. So instead of paying that higher price, you can wait for interest rates to drop, refinance. Now, of course, the disclaimer on this is if you can reasonably afford it. So if you're getting into a house in these higher interest rates that you can't afford, well, is that going to make sense for you? No, of course not.